Okay, let's go.
Hello. So we're gonna look at the levels again. Start with ES, and it's not much different really. Last week we gapped up, we filled the gap midweek, and then we bounced from there. Um, Thursday, and then Friday, super low volume, so it didn't really do much. The technical points remain the same. So under this 75.15 and then a loss of the 74.52, we want to be bearish. If we stay above these levels, which we are right now, there's no reason to think we're not going to take the high and make new highs. So right now, bullish on the market until proven otherwise. So looking at last week's action on the 5-minute chart on NQ, um, I'm just going to check the week's volume profile up for a second. As we can see, we pushed down into here, which is a previous week's point of control. Massive reaction off there, accepted above this old weekly volume area high, and then continued to transact above it into the end of the week. So currently above that week's value. So what we're going to do is get week gone value area up, and I'm going to keep these lines on my chart like I always do. So we're going to put the point of control on there in white. I'm going to put the volume area low on there in pink, and the volume area high in green, and then I'll keep them lines on my chart, know what they are. And then we use these as our levels to work from in the coming week. So if we transact around here and react, we want to be long and to see if we're going to push up to take the new highs. Obviously, we went through the levels in ES. So if them major levels hold and we're expecting to go higher in ES, we'll also be expecting to go higher in NQ. So as long as that holds, there's no reason we're not going to take the all-time high and make new highs. Or if we start losing this week's value area and get back into this old week's value area, then we can expect lower prices. So news risk to be aware of the coming week. We've got GDP and I think PCE on Thursday. But other than that, it's just going to be the usual of Trump tweets moving the market. Obviously, what we've had up to now is bad war news. We get a little bit of a sell-off. Good war news, we get a massive rally. So what I'd be looking for is a change of tone in that. So if we suddenly get some bad war news and the market sells off and doesn't immediately bounce back, that would be a change in character. If we get good war news and the market doesn't massively rally, that is going to be a change in character. Otherwise, there's no reason to think anything's changing. It's just we'll maybe sell off a little bit with some bad news, wait for the good tweet to come, and then the market will rocket again. So yeah, look out for a change of character. If nothing changes, we just play it as we have been the last few months of play the sell off when it's there, but don't overstay the welcome. It's clearly still a bull market until proven otherwise, so we want to be long. So I'm going to show the cleanest trade I took last week, which was on, I think, Thursday early session. So what I class as a clean trade is a kind of textbook entry for my model, which gives minimal drawdown and massive potential upside. So that's what we got on Thursday. So if we break this down, what we had, so Asia was here. This was the Asia range. What I was looking for, so I first come on the charts at 5 a.m. So my 5 a.m. model wasn't set up because of all this side reaction. My 5 a.m. model is a trend-based model. So what I want to see is a strong trend and then play the finishing move of that trend. So it was a no entry at 5 because of all this side reaction. And what we did get at 5 was a massive sell-off, which would have been the opposite entry to what I'd been looking for, because technically we were still bullish of in open there, 5 a.m. here. So luckily that saved me a loss by having that trend filter. But watching this sell-off, I wanted to see the Asia low get took. So I'll just clean that up. Actually, so my Asia is from 1 a.m. That's what I always track. But what we do see is this nice consolidation pre-Asia. And also this level, which is a previous week's value area high. So we tapped into there, and on hitting that level, what we see was a nice increase in volume. So if you look here on that last red candle, big volume spike. That's what I'll look for in reversals. I want to see a kind of capitulation of volume at the intended target. So as soon as I see that, then if we get a following green candle, that's my entry. So obviously some people think that is too tight, too quick. You want to see a confirmation. But for me, that is the confirmation, because we've got an area of interest, this Asia consolidation area. We're at a weekly area that I deem significant, as in a previous week's volume area high. And then we get a capitulation of volume followed by a nice bullish candle. So as that candle's turning green, I'm in the trade, targeting the most obvious target, which for me was Asia high. So let's say up there. And then my set target is just an ATR driven target. So if the ATR is in a normal range between 7 and 14 points per 1 minute candle, my stop is just a standard 10-point stop, which I enter on in bracket orders, so that goes in automatically. So that gives me a nice 14-hour trade on Thursday. I'll play the video of the trade entry next, because I got that one on a screen recording too. But another reason why it was so clean is, look, if I kept the runner, look at that. We just went all the way up all day. I could have held that for New York, and it was almost a 500-point trade. Crazy. So that's why I'm doing a lot of testing to try and look at the environment on what could be possible New York holds. I would never hold the full position because it'd be too much stress, but maybe just keeping 1 micro, 2 micros on for a bigger move. But that being said, 14R is a crazy trade anyway. So to recap for the coming week, as long as we stay above these levels here, 75.15, 74.52. We're bullish for new highs. We start to lose them levels, then on ES and NQ, we want to be short to take these lows, test this level, and possibly sell off further down. But until proven otherwise, we're bullish. Watch out for a change of character. If we suddenly don't bounce on good war news, or we sell off hard on bad war news without recovery bounce, that's a change of character. Until we see that, there's no need to be thinking anything's going to change. One thing I would keep an eye on, a bit of a bonus chart, is oil. Obviously, we had a big sell-off all week, really, on the news of the deal being signed and whatnot. But what we can see, as soon as the contract rolled, which was kind of Thursday, we made a bottom and we bounced. And there was not really any bad news on Thursday and Friday to give us that bounce. If anything, there was more good news that oil was moving through the strait. And, it went $4 off the lows. I got a long in there, only small for a swing trade, just to see if we want to go back up to higher prices. But yeah, if we get more kind of selling pressure, then that's going to be probably a bit of a tailwind and bullish for the indices. If oil starts spiking again, that could be negative for NQ and ES. So yeah, keep an eye on oil, especially at the open tonight. See what happens there. So yeah, that's that. Feel free to reach out if you got any question about these levels, my entries, or you just need some advice on building your own strategy. I'm a big believer in there's all the technical strategies can make money, but it's your risk management and how you deal with your trades that is the edge. So yeah, take it easy this week. Hope we all make money.